Sharmila Joshi joins in to answer all our stock queries, and Harsh Rungta is with us and he'll be answering all our personal finance queries. Hi, good afternoon to both of you. Thanks very much for joining in. Let's get started. We have a caller already on the line. Hitesh Dave calls us from Ahmedabad. Hi, Hitesh.
Hello.
Hi, what's your question?
Sir, I have 25 ONGC at the rate 404.
Okay.
Now what to do? Whether I have to switch over to other sector, and if we other sector, where I can reinvest it?
Okay. Are you a longer term investor normally?
Not, sir. I am just piecemeal. I am doing this piecemeal trading, like.
Okay, okay. Sharmila, he has a shorter term time horizon. He does trading on and off. How have you read the recent news flow on ONGC? And for a retail investor like him, what's the advice?
Yeah, I think the trouble here is really the price that he bought at and the fact that his view on the stock is a little short term, because I don't think that very many great things are going to happen for ONGC in the near term. The crude prices, the way they've been falling is not a great positive for any company in the exploration space. And secondly, I think the overhanging worry, part of which you did hear some positive news that there, the subsidy burden sharing bit, that there could be some relief for ONGC there. So I think that could be the real thing, that could sort of add the bright spot for ONGC in days to come, because it doesn't look like crude is going to recover in a hurry. So I think that he has to give himself at least a 3 to 6 month kind of an outlook if he wants to stay invested in ONGC for it to go back to 404. So if he is not willing to wait for about 6 months, then he should look to switch. I would recommend that he can switch to maybe an IT stock and buy a frontline stock like a Tech Mahindra.
All right, then maybe a bit of a switch from ONGC because of that subsidy overhang isn't such a bad idea. Tech Mahindra is one of the picks that Sharmila has given you. But let's pull up the mid-cap index as we speak. That's broken even, and a few stocks are moving, and they're moving quite well. So you pull up something like a Reliance Capital. Just in the last few minutes, that one has spiked up. Even something like a Lanco Infratech, that stock has been an underperformer the last few years. That stock, in fact, is higher as well. And you pull up a few other names like so GM Financial as well should come up for you. Something like a Bank of India as well should come up for you. Those stocks, in fact, they're moving quite well. Bank of India as well as Reliance Capital, both of them should be up for you. Even if you pull up something like a Greaves Cotton, that stock, not very high volumes, but it's spiked up in the last few minutes. GM Financial is the other stock that I'm talking about. That one as well has shown a good recovery. So it appears that 8,300 level appears to be the point where traders are taking some kind of a punt, or they're going ahead and buying it at around 8,300. But the mid-cap index as well has recovered, though as we speak, it's dipped back into the red. But let's go back to our callers. Ram Kishore calls us from Jaipur. He has some investments in Wockhardt. Hi, sir.
Hello.
Hi, sir. How can we help you?
Sir, namaste.
Namaste, sir. आपका सवाल क्या है?
सर, मेरे पास वोकहार्ट फार्मा के 50 शेयर लिए हुए हैं 855 रुपए के.
Superb, all right. और सर जी, आपका टाइम होराइजन क्या है? आप लॉन्ग टर्म इन्वेस्टर है?
सर, मैं साल भर भी रख सकता हूँ, 2 साल भी रख सकता हूँ. आप बताएं मेरे को कि मैं क्या करूँ.
All right, sir. Sharmila, what do you think? He's got in at around that 855. He's quite a gutsy investor, I would say, because I don't think anything really has changed from then. But the stock has been on the tear from the time it's come into the F&O space.
Yeah, I think that's always it does add some amount of interest in a stock, and I think within those 3-4 stocks that were introduced in F&O, I think Wockhardt would be, I think, the obvious choice for sort of traders to go towards. I think for Wockhardt or for any pharma stock, I think the only negative can be some kind of news flow from US FDA, some inquiries, some kind of comments, etc. Because I think they've become far more sort of vigilant and proactive in sort of examining or company factories, because of the kind of sales a lot of these have been able to clock in the US. So I think that's the only caveat, and we did see Wockhardt really go through this whole series of bad news and fall and then recover from there. But as you said, I don't think really anything has happened to justify the kind of move that we've seen from that 800 levels to this 1000 level, except for the fact of being introduced in the F&O. So with a year's perspective, I think it's a decent stock. But as I said, just keep your ear to the ground for this kind of negative news flow, not just for Wockhardt, but I would say really for any pharma company, and then stay invested. I would have a 1-year target of about 1200.
In fact, for Wockhardt, if you see all the way from 1993, they had revenues at that time of just about 143 crores. They've now grown to a company which has sales in excess of 4,800 crores, which is roughly, a CAGR of about 17 odd percent. In fact, even their market cap has risen in that period from 291 crores to now about 11,400 odd crores. That's the journey of Wockhardt so far. But another query has been sent to us. Ranjan Kurana writes to us from Haryana, and he wants to invest via SIP. So he wants to know what should be the ideal amount, how much should he put in. I think he has a view of a long-term time horizon, and he says that he earns about 15 lakhs per annum, Harsh. So he doesn't know how much of it should ideally be invested.
So I think the right answer to that question is that you should invest the amount that you need to invest. I mean, you really need to know for what you are investing.
Now, I guess this is more a question of, do you account for your expenses first and just invest a surplus, or should there be a more of a disciplined approach?
Absolutely. So I think he's clearly looking at systematic investment plan which has discipline in it at its very core. If he's not doing the goal-based, I think one good way to look at it is that at least 25% of your net income you should be investing for the future. If you could invest more, you should invest more. In his case, so that should account for roughly about 30,000. He is young, I think 37 years is his age, so he can clearly look at a long-term investment. And if it is long-term and he has the risk profile to match, he can look at investing systematically in equities. And I think if he does that, a 30,000 rupee investment in equities, assuming a return of about 12.5%, can give you, it can give you an excellent return. It can add up to about 3.2 crores, which even at today's values, even if you disinflate it back, is 60 lakhs plus. So that's a real good saving, a good retirement corpus that he can build up.
We have a personal finance query. Nitin Jain writes to us from Raipur. He has been saving for 1 year to buy a house. He wants advice on which would be a good home loan and also how to manage his savings. He earns roughly around 7 lakhs per annum. He wants to accumulate at least 30 lakh rupees. Harsh, over to you. What do you think? How could he do this?
So I'm not very clear when he wants to buy his house. So I think what he's right now doing is investing to sort of save up for the down payment. And I think 30 lakhs is probably, given 7 lakhs is the income that he's talking about. And
I'll give you another data point. He says that he's able to save only around 15,000 per month currently, so he'll have to push that up as well.
Either he pushes that up, so then he can buy the home from there. I think he's talking of a loan. 30 lakh loan. A 30 lakh home. Or if he's talking of a 30 lakh loan, then he's investing for the down payment. If he is investing about 15,000, assuming he's got 3 or 4 or 5 years to go, he can look at systematically investing in a balanced fund. If he's got at least 4 or 5 years to go. And that, I think, at the end of 5 years would roughly give him 12 lakhs if he chooses, assuming in a return of about 11.5%. Balance, he could take a home loan. And I think which home loan is good will really depend at that time. Really, what is good today may not necessarily be good at that point of time. So I think right now he should concentrate on getting his down payment in order. And I think systematic investment in a balanced fund is a good option for him.
All right, that's the advice on the personal finance front. We've received another SMS. This time it's coming from Sanjay Telang. He's written to us from Indore, and he says he has some investments in Tech Mahindra. So he has about 30 shares, which he has bought at the rate of 1,600 rupees, and now wants to know if he should hold on to the investments or sell it. He says he's a retired person. So, Sharmila, what's the advice?
I think since he's a long-term investor, it's a definite hold, because I think the kind of growth trajectory that I'm expecting from Tech Mahindra in the next couple of years would give me a comfortable target of about 3,200 for the stock. And in any case, I think he's making good gains from the level that he bought at. So, yes, I think given the way the business is poised and the kind of their verticals and the kind of the recent news flow around the stock and the possibilities going ahead, I think 3,200 would be my target and I would stay invested.
Tulsi Das Kotwani calls in from Rajkot with a query on IDFC. Hi.
Good afternoon, madam.
Good afternoon. What's your question?
Yes, I would like to invest.
Go ahead, sir. What's your question?
Yes, I want to invest in some infrastructure, good infrastructure stock, and my choice is IDFC. I would like to buy 1,500 to 2,000 shares. So, what is the advice?
Okay. So you want to invest a cumulative 5 lakh rupees, is it?
Yes.
Okay. Sharmila, would you advise a pure infra play? Probably not, but he wants to invest about 5 lakh rupees. Would IDFC do it for him?
I'm a little confused because I think if he has other stocks and a portfolio which hopefully is like of which only IDFC what he's planning to invest is a part, then it's fine. But if 5 lakhs is the total investment in equity, then
Mr. Tulsi Das, can you give us a sense of what your portfolio consists of?
No.
Okay, I think there's some confusion. I'm sorry, Sharmila, go ahead.
No. So I think that if IDFC is the only stock in your portfolio, then it's never a great idea. I think then you should obviously have more than one stock. But by itself, IDFC is a good option. Again, I think it's a company that finances infrastructure projects. So it's not a direct infra play in that sense. So, and I think a 2-year horizon for IDFC is fine because I think, within that period, they will be able to leverage their sort of niche position that they have within infrastructure financing, and they'll be able to really take it to the next level, given the fact that everybody is expecting infrastructure to be an area where a lot of financing is sort of going to be required. And number 2, I think they have that whole banking play which will sort of play out in the next couple of years. So from both those aspects, I think IDFC is a good stock with a 2-year horizon. But as I said, it's not a direct infra play and it cannot be the only stock in your portfolio.
All right, Mr. Tulsidas, I hope that advice is useful for you, that it's not the best play at the moment, and it actually depends on what your entire portfolio consists of. Another query sent to us is by Ravinder Prakash. He writes to us from Delhi and he wants to know what are the benefits, tax benefits of investing in a ULIP scheme.
Well, I think the tax benefits of investing in any life insurance plan, including a ULIP, is similar. If the premium that you pay is at least or is less than 10% of the amount that you are insured for, then in that case the entire premium you can get as a deduction in the year in which you pay the premium. The maturity value is also exempt. If, however, the premium is higher, then what you get as a deduction is only the premium up to 10%, plus the maturity value is not exempt. At maturity, in fact, there will be a TDS on the maturity value that has been introduced in the budget. Plus, you will have to pay tax on the gains portion. Whatever is the maturity value minus the premium that you have paid, that will be taxable in your hands. I think this is one part that very few people are aware of, because traditionally insurance has always been sold as a completely tax exempt option. I think people should become aware, especially people who are a little older, they don't get such a high sum assured. I think because of that, clearly there will be TDS and that amount will be taxable.